Fulcrum Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us here at AusBiz. So, the markets overnight. Well, central bank decisions and earnings results are weighing on investors, with global equity markets ending Monday mixed. It was a choppy session on Wall Street as investors prepare for the outcome of the Federal Reserve meeting later this week. Energy was the worst performing sector as oil prices fell heavily, and the small cap Russell 2000 was a notable loser after 3 straight weeks of gains. Results from Apple, Amazon, Meta and Microsoft are the earnings focus for investors this week. However, overnight it was Tesla which provided some support to the broader market after Morgan Stanley added it to a top pick of US car makers. McDonald's shares rose strongly after it said its customers were opting for cut price meals, which saw the fast food giant report its first drop in sales in 13 quarters. Its shares are down around 15% this year. Abbott Laboratories closed down after a court ordered the health company to pay $495 million in damages following a trial that found its formula for premature infants had caused dangerous illnesses. And in Europe, shares in Dutch brewer Heineken slid almost 8% after increased beer sales failed to materialise, and it took an €874 million impairment charge on its Chinese investment. And Dutch medical device maker Philips reported second quarter results that exceeded analyst expectations due to cost savings, which sent its shares more than 10% higher. Well, markets are waiting on the Federal Reserve meeting on Wednesday, when the central bank is expected to signal the start of its rate cutting cycle in September. The US rate futures market now fully pricing in a rate cut for then, with about 68 basis points of cuts this year, with 2 expected of 25 basis points each, and the chance of a third before the year is out. Well, there was little macro data overnight, aside from the Dallas Fed Manufacturing Survey, which softened and has been in contractionary territory since May 2022. Well, the US 10-year yield fell to around 4.16% and the 2-year little changed at 4.38%. The US dollar has held steady as traders brace for policy decisions from the Fed, as well as the Bank of England and the Bank of Japan. The yen, little change following the Japanese currency's strongest weekly rally since late April on speculation that interest rates will be lifted this week. The Aussie dollar is trading at 65.5 US cents. All right, let's get across those market considerations as far as what we're seeing at a macro level and how that's playing out, particularly for equities. Steve Sosnick is the Chief Markets Strategist at Interactive Brokers. He joins us now. Steve, welcome. Great to catch up with you. So let's first start at what we're seeing on equity markets. Of course, we're looking forward to more of the Mag 7 reporting this week. What are your expectations, I guess, sort of given what we saw, particularly with Alphabet last week, where, well, the market judged it fairly harshly, didn't it?
Good morning, Andrew. This is the thing that I'm quite concerned about, and it's something I've been concerned about for a bit here, which would be that, you know, these companies can beat on many measures, but their expectations are so high. You know, the bar is set so high. Well, we're all watching the Olympics, so you know the pole vaulters can't get over that bar at this point, and that's really what we saw. You know, Tesla's earnings kind of stunk, but Google, you know, Alphabet, really wasn't bad across the board. But there were some comments from Sundar Pichai, CEO, who said that this money that they're spending, the billions they're spending on AI, it's gonna cost them a lot of money, and it's gonna take longer than the market expects. Coincidentally, that's the same thing we heard from Mark Zuckerberg on their prior earnings call. We'll see if he reiterates something like that later this week. But I think that's I think the part that's scaring investors a little bit is that this AI frenzy that we're going through may not pay the kind of dividends that we're hoping for in the short term. Again, I go back to the internet example, which the internet was everything we'd hoped for and then some. but it took a lot longer for those benefits to reach the bottom lines of the companies that were employing the internet. And that's, I'm afraid, where we might be in terms of AI right now. And let's see how skittish the market is. It certainly hasn't been all that skittish up till now, but let's see how they react. And well, let's see what the companies say first and then how they react.
Steve, what are you seeing away from the mega caps and in particular the AI thematic at the moment? As I mentioned there earlier, did have McDonald's out with its results as well. Look, I guess reflecting what's going on more broadly with the US consumer, we're seeing that here as well. It's penny pinching, isn't it? We're trying to save some money and therefore going for those cheaper meals.
Yeah, so sure. I mean, sure. Let's miss on our numbers and go up. That's kind of the opposite of what we were seeing in some of the techs, right? I think this is part. I've been calling this latest move the rotation, because the problem is people are rotating out of the mega cap tech stocks and rotating into consumer staples, a little bit of consumer discretionary, not so much. Some industrials, X energy, which is always a bit fluky. And I do think this is what's going on. The problem is we're so top heavy with mega cap tech that if there's some normal rotation out of mega cap tech and into, let's say, small caps, or even value stocks, the S&P 500 and the Nasdaq 100 get clobbered even as we see that. One of the days last week, which was I think it was Thursday, was one of the worst days last week. You still had about a third of the S&P 500 going up, and you still had actually the value portion of the Russell 1000. One of the ETF pairs that I watch is VONV and VONG. They're Vanguard ETFs on the Russell 1000. The value VONV is value, VONG is growth. And when you split it out that way, the value stocks have been, they haven't been great, but they've been holding their own. The growth stocks have been getting clobbered, and even some of those down days, we saw the value stocks holding up. So this is, I think, some rotation. That the problem is when you have 8 stocks becoming a third of the S&P 500 and call it a half of the Nasdaq 100. If there's money flowing out of those, there's really it's hard to see the indexes doing anything other than go down.
Now, of course, we're also awaiting those central bank decisions, the Fed, the Bank of England, the Bank of Japan. In regards to the Fed, I mean, that rate cut for September, pretty much 100% priced in now. Is the question, though, not so much the timing, but as to why they're cutting and what the impact is going to be for earnings if perhaps the Fed's seeing there is weakness in the US economy and that's likely to affect those corporate earnings?
This is really the question we have. This is why it always comes down to Powell's press conference, the statement first, and then the press conference second. So even in a meeting like this, where right now I think the odds are about 4% that they're actually going to do anything about rates this meeting, there's going to be a lot of signaling. And the question is, what are they signaling? Will they be signaling that they're starting to pay attention to some of the weaker numbers coming out of the labor market? I don't know that they see the numbers that are coming out Friday before the meeting on Thursday, but they have seen some of the other numbers, which have seen unemployment tick up a little bit, and some of the wage pressures ease a little bit. So let's see what they say about that. Let's also see how Powell approaches it. Remember, we've discussed this many times. It's really not what he says, it's what the market chooses to hear. And I think, a lot of times when he says, well, it could be this or it could be that, and the market hears, the this or the that portion, which is most suitable to them at that moment. So I think there's going to be a lot of messaging, and also depending on what Powell says and how the market interprets it, you'll get a second round of messaging later in the week and into the early part of next week when all the other Fed governors rush to do either jump on what he said or do damage control if they didn't like what he said. And that's what we'll be listening for.
Steve, I see you also point out that you think the Bank of Japan decision is equally important. Why is that?
Yeah, well, this one's much more of a toss-up. It's about a 57% chance that they're going to raise rates. Remember, Japan doesn't have room to cut them, really. And it's more or less a foregone conclusion that they're going to raise rates by September. So this one is very much of an in-play meeting. When you're talking about 57% chance, well, that's essentially a coin flip, right? And what's very interesting to me is how the markets reacted to the yen over the past couple of weeks. And I sent you a chart. I don't know if you can reproduce it here, but basically I charted, oh, here we go. The blue line is the Japanese yen. The white line is the NASDAQ 100 mini futures. So it's charted basically because they both trade essentially almost 24 hours. And I mean, yes, causation is not correlation, but there is causation here because as the yen strengthened, it forced a lot of people out of the carry trade. The carry trade meaning you've been borrowing money in yen, which pays, where your interest rate costs are essentially nil, and using it to buy something else, whether it's higher yielding assets, fixed income, or stocks, with appreciation potential. And it seems pretty clear to me that a lot of traders got forced out of their carry trades if they were selling yen to buy NASDAQ. Again, it's not 100%. It's there's always a little bit of a difference, but that's uncanny, and there is cause and effect here. So I do think if you see a big move in the yen one way or the other, that will have that could have a very dramatic impact on risk assets, and particularly the same tech stocks that we're talking about. And that might also influence the mood. Will you be a little more charitable to hear what Meta or Apple have to say after you know what the Bank of Japan has done, rather than beforehand or afterwards. So that one's the one that I think it's very important for traders to keep an eye on because it affects assets worldwide in a whole host of things, emerging markets and a whole range of global bonds and equity markets. So that to me is the one, because it's in play, that I think has got the most potential to move markets.
That's a great point. Steve, thanks so much for joining us from Interactive Brokers.
My pleasure as always, Andrew. We'll talk again soon.
Cheers. Just before we go, let's take a look at where we're likely to open. And we're on track, in fact, to wipe out those gains we saw yesterday. So SPI futures are down around 0.7%. And stay with us because the open is just a couple of minutes away.